Hello there. Today is Friday. It is 4:17, so just after the close. Boy, was it a wild week. Just a friendly reminder that this is for informational purposes only, mainly to give clients a heads up of what I'm thinking. This is not meant to be a recommendation in any shape or form. This is based on clients' risk tolerance, so on and so forth. So, want to get to the charts and give you an objective perspective of where we stand. Today's message, whatever you want to call it, session is called Concerning Breadth, which basically means you have some stocks doing okay, but the majority are not. We've had this since February, and price action is okay. I'm not sure how much longer it's going to last, but price action wins. Price action has been fine. We've been holding key levels, but we are seeing worse breadth continually. Now today, Friday, we had a nice bounce back. Where did we go? Well, we'll show this to you in 1 second. So just to give you a heads up, this is for the week. So clients, we were in cash, right? The whole week. The third week of every month, this entire year basically has been the worst week. Whether it's, options expiration, it hasn't mattered. It's for some reason the third week of every month has been when we have tested a lot of times the 50-day moving average. This week was no exception. So again, we've been seeing since February bad breadth, few participating stocks, but the market being held up mainly by, large cap. And that's okay. Don't get me wrong. There are still opportunities in a lot of places, but high multiple stocks are struggling if the 10-year yield, again, the 10-year yield is below 1.25. If we're below 1.25, the high multiple stocks have taken a tumble. Today we got a little bit over that, like 1.26, and just from that move, high multiple stocks had a bid. Now, it's all technical. I'm not sure it's been a recurring theme the entire year, and I'll show this to you. So again, you can see that even though I wish I would have bought at times this week, we were still better off to be in cash. It's been like that basically the last 2 weeks. August and September tend to be very, very choppy. Not today, but this week we also received news about tapering, which I thought needed to be done a while ago. The Fed continues to add money or buy bonds, which puts money into the system. And I don't think we have a long-term inflation issue, but short-term, it's definitely spiking. A lot of job reports are getting back to normal. We had, since the bottom 100% return, usually that's when the market really kind of starts to struggle. But price action has not died yet. The continuous thing that we continue to see, continuous trend that we continue to see, I'll bring this up real quick, is we see almost every time we touch, and if you look here, a lot of times it's right around the third week, we test the 50-day moving average, this blue line, and it ramps. You're like, Jonathan, why didn't you do this? Why didn't you buy it this time? The reason why is most of this occurred overnight. I thought we might get a retest, and we still might. My key level, and this is very interesting. I could tell you every day what's going to be trading. I'm not sure direction, of course. If we did, we would be doing much better. But I could tell you the key levels every day. And this week, 43.52 held overnight, which is right at the 50-day moving average. That held, got bought. Today, key levels held. We went directly to the spot where I said if we go below 4,441, that was earlier this week. If we go below that, we're going to probably test the 50-day, and it happened. Now we're right back to that level. A lot of times these can be fake outs. Right now, there's no reason not to be too bullish. You can be cautious, but it's still hard to be too bearish when everything continues just to get bought. Now, you got to understand what's kind of happening under the hood. At key levels, at key heightened levels, it goes a little bit below the key level, to get people to add shorts, and then it short squeezes. We're getting to a point where many of the levels that we're seeing, it's getting really pricey out there. And the names you want to be in, like the Google, the Apple, a lot of Microsoft, great names that I want to be in, but they're getting pretty pricey. Valuation standpoint, they're okay, but they have run significantly and really holding us up. Today was an all-around rally, okay? So you're like, wow, it seemed like the last few days was a really nice comeback, and they have been, but it was still a negative week. So I was glad that we made the decision not to, really push at heightened levels. This is a market where you have to buy the dips and sell quickly. I mean, we haven't really gone anywhere for a month and a half. And that's going to be frustrating. And you have to understand, after rallies like we've seen, it could be a long period before we get out of this consolidation. August and September are usually really, really kind of boring, not necessarily boring, but lackluster performance-wise. So got to be careful, but I just want to run through a few charts and show you what I am seeing and why I'm being a little bit cautious still. Again, the risk reward is not good at these levels, period. But it doesn't mean it's not going to go higher, okay? So I'm very objective about that. It's just saying, hey, if we were patient, we're probably going to get better pricing. It just depends if you can be patient. And most of my clients, if you're long-term, which all of you are, let's have a little patience here. I understand the indexes are going higher, but we need to see some participation. And as you can see, since the uptrend that basically ended mid-April, we've been kind of going sideways. This is the QQQ, which the NASDAQ 100 versus bonds. You want to see this uptrend continue, and we've been going sideways. This is a sell point, in my opinion, but now we're kind of rebounding a little bit. So you have to be objective and say price action is okay here. Let's test the next one here. This one was really interesting, okay? So you could see here was the breakout. Like the RSP is equal weight S&P 500. So it's not heavily weighted in the big 5 or 6 stocks. It's equally weighted. Each 500 stocks are equally weighted. Okay, so a good, healthy market sees these do well. And this is what I've been saying for months. This has been ugly. And I've been saying for a long time, this has not been in an uptrend. We had a nice boost the first 2 weeks, which has been pretty common, of the month. And then we went down. We're doing okay, but I'm a little... it's getting a little bit pricey, and a lot of the names that I would want to be in if I got it. It doesn't mean it's not going to go higher. It very well could go to 4,500. Okay, so I'm very objective, very open to that. But long term, is it great entries? You're probably going to have to scalp, and I'm happy to do that. But after a day like this, it's buy the dip, sell the rip. So let's go over a few more charts and we will end it so it's quick and you can kind of see what I'm seeing. So you can see there's good things and there's bad things. The 50-day moving average held, that's a good thing. Breadth is really not good at all. The divergence checkup, this is really important. Let's review this. So this is showing the S&P 500 still on an uptrend. You see we saw the little pullback this week. Percentage of stocks in the S&P 500 above the 50-day moving average. It's still on a downtrend, trying to go up, but you can see here, it's not great. Percentage of stocks in the New York Stock Exchange above the 50-day moving average, downtrend. So in short, the easiest way I can describe this to you is if you randomly picked 5 stocks, in a healthy market, those stocks would do well. And right now, 5 out of 10 stocks are more than 5 out of 10 stocks are not doing well. It's more like 7 out of 10 stocks are not doing well. Tough environment. So my concern is, and why I basically have been saying all week on social media, just kind of watch Apple, watch Microsoft. If they go down, it's going to probably pull the market with it. Okay. Along with again, not much is really mattering in the news. It's just whether the market can get people short and then people will buy at key levels. I'm not sure how long that's going to last, but you can see here, there's a lot of divergences. Market up and overall breadth is down. That's not good risk reward. So I want you to see this to make sure you understand, like, I understand the market is going up. It was down this week, and I'm glad we are still in cash, but there remain participation issues. Okay. Friday, great day. No doubt about it. I wish I could have gotten in, to be honest with you. A lot of the move happened pre-market. And I'm like, I'm not sure how much I really want to chase this. It has not been a successful time buying once it's up 0.4%. And it went up a little bit higher. As you can see, it went up 0.4 higher. But it's right at the key level that I said, 44.41 this week, that it broke. If it holds that, we'll be fine. If it doesn't, we may need to test 4,400, and that might bring some buyers in. But tough seasonally to really get too involved here. Let's look at a few more charts, and I think that'll kind of give you the main scoop as to what I'm seeing. This is also really interesting. It's, again, don't get too bearish, because when we have the 7 to 10% dip, it'll get bought. Okay, so will the market struggle at a similar level to the VIX, which is basically a volatility index? We had a nice spike this week. So you can see these kind of trends where it basically gets to the top of this and goes down. We got up to like 25, 26 this week and quickly went right back. It's good that, again, this is a good thing that this is below 20. Okay, so similar to 2008, 2009, the next year, where did we kind of struggle to get through? Right around the 15 mark. That's exactly where we've been struggling and kind of going higher. I don't know. Nobody knows. Could very well go much lower next week in the fear or just volatility. But the last 2 days have been really nice moves. We might need to consolidate that a little bit. But overall, the summary of all of this is you can't get too bearish here. There are a lot of bad things that I'm seeing, but price action, which is the king of everything, is completely fine. Okay, so it's hard. The game is hard. If it were my choice, I would say even if it takes 3 months, let's wait on a realistic dip, because price action is great. I'm not sure we'll get the dip. There's so much money in the system. I think we're going to get a 3 to 5, which continually happens the third week of every month pretty much, but we're getting pretty cooked here in a lot of areas. Not necessarily high multiple. Those areas are legitimately down 25, 30% at this point. So you have to understand that not every stock is doing well. I see that my camera is going, struggling with the lighting. So sorry about that. It's driving me nuts too. But overall, the market is hanging in there. So don't get too bearish, too bullish. This is an environment where you got to scalp, which means you get a quick gain, you take it, because it's going to test lower. So that's my opinion. That's kind of what I expect for the next coming weeks, is just a lot of choppiness. And that's been the regular theme for a long time. The trend continues to be up, which is good. At some point, I'm a little concerned what happens when the big, great companies that everybody wants to be a part of struggle a little bit. Can we rotate? If rates go up, potentially. That kind of needs to happen, in my opinion. You could see a day like today when the 10-year yield got above 1.25. We finally rallied. That was today. Now we're at the exact key level on the S&P 500, 41.40. Or excuse me, 44.41. 44.41. And so we'll see what happens. But thanks for your trust. We're going to end it there. But hang in there. I think we'll get some opportunities. There are opportunities. The problem is it's mostly being held up by the great 10 companies that everybody wants to be a part of. And I want to be a part of them as well. Financials are great, and I don't expect them to change really. But the market doesn't always go up despite what the market is showing right now. And that you have to remember that from a psychological standpoint. Right now, it feels very much like the market is playing a little game. Hey, let's try to get everybody short at key levels and then buy it regardless of what price is. That truthfully seems kind of like where we are at this point. So it doesn't mean you can't make money in this market. You definitely can. Key levels are being bought. Today, 43.75 held overnight. That was the key level. It held and we skipped 2 levels up. That's the way the market works. It usually goes 2 levels, and that happened on the way down this week too. Went directly to 43.52, 50-day moving average. So thanks for your trust. We'll keep you posted as always. Thanks again.